This video we are diving into every charting tool inside TradingView, from simple lines and Fibonacci tools to Pitchforks, patterns and advanced forecast tools. By the end, you will know what each tool does and when to use it. I wouldn't be going into too much details with the tools because that will make the video very long. However, if you want a detailed explanation for a particular tool, just drop it down in the comment section and I'll be happy to create a video for you. Let's get started. The chart tools in TradingView are divided into sections, and you're going to start first with the cursors. So under the cursors, we have the cross, the dots, the arrow, the demonstration, the magic, and the eraser. So the cross basically gives you the crosshair as a pointer. It also indicates to you the date and the time, as well as the price, as you can see on the right side of the screen. Moving on to the dots just replaces the crosshair with a dot, but still maintains the date and the time, as well as the price. And moving on to the arrow. The arrow is just a regular pointer that the computer mouse gives you, and as you can see, there are no horizontal or vertical lines intersecting at the pointer. However, you do have the date and the time as well as the price. Moving on to the demonstration. The demonstration has visual highlights around your cursor. It is used mainly for teaching, webinars or screen recording just like this one. It makes it easier for videos to follow your mouse movements. Now the next is the magic wand tool. So the magic wand tool is used to simulate a celebration animation, and that's just its function. So I click anywhere on the screen, this is what happens. Now moving on to the eraser tool. The eraser tool is used to quickly remove a drawing on a click. And for example, if I create a drawing right now, I can head to the eraser tool, locate the drawing, click on the drawing, and then the drawing disappears. Now moving on to the trend line tools. Under the trend line tools, under the line section, we have 8 tools to cover. The first one obviously is the trend line tool. Now the trend line tool is used to draw straight lines to mark trends. So you start at the point and then you move to your preferred location, and then you click and you release, and then it creates your trend line for you. Moving on to the ray tool. The ray tool draws a line from one point and extends to the other infinitely. So if I start my point here, as you can see, the line is drawn infinitely to my desired location. So if I do release the drawing at this point, you can see it takes it infinitely to the right side. And that's just the ray tool. Moving on to the info line. The info line displays price, percentage change, how many candles form within a range, and the angle between the points. So for example, as you can see, I click one point and I move to my desired location, I release, and then as you can see, it tells me the amount of bars I have inside that range, the distance covered, the angle of the trend drawn, and the percentage change. I'm moving on to the next one, which is the extended line. The extended line is like the ray tool. However, this one extends infinitely on both ends. So instead of the ray starting from one point and heading to the other, this one extends in both ways. And as you can see on the screen, to the left and to the right as well. Now the next tool is the trend angle. The trend angle shows the exact angle of the trend in degrees. If I draw a trend just like this one, it will tell me the degrees of the angle of the trend. And for example, as you can see here, this is 29.97 degrees. Moving on to the next tool, this is the horizontal tool. The horizontal tool just draws a horizontal line across the screen, and what it is usually helpful in is identifying support and resistance zones and also marking key price levels. So example, as you can see, you have your price level here, and you can also mark resistance and support zones. Moving on to the next tool, which is the vertical line. The vertical line just creates a vertical line that marks a specific time point. So if I do click anywhere on the screen at all, it just creates a line and then it marks the exact date and the time that candle is inside. Moving on to a combination of both is the cross line. So the cross line combines both the horizontal and the vertical line, therefore indicating to you the date and the time as well as the price. As you can see on the screen, I move it anywhere at all. Now moving on to the channels section. Under the channels, we have the parallel channel, the regression trend, the flat top or bottom, and the disjoint channel. So the channels are used to mark parallel line movements, and the first one is the parallel channel. This one will help you to create a trend line at the top and at the bottom in a parallel form. So when you click to create a trend line, you can just move down or up to create your channel. And as you can see, it creates a line in between to fill the middle zone. And this one will help you to trade a trend in both ways, where you can open a short position at the top and also open a long position at the bottom. Moving on to the regression trend. Now this is an advanced version of the parallel channel and also an automated version. It draws the best fit trend line while automatically generating upper and lower boundaries through a selected range of price action. So you don't necessarily need to draw the trend. All you gotta do is just select a range. So for instance, you can start from here and then say you want it to draw a channel for you from that range to this range, and automatically it creates that channel for you. Very useful. And the next one after the regression trend is the flat top or bottom. The flat top or bottom draws a line with one fixed horizontal and a free angle on the other side. This one will help you to identify patterns like the flag patterns. So when you draw your angle, there's another option to place a horizontal line below or above your drawn trend, and this one will help you to identify patterns. Moving on to the last one of the channels is the disjoint channel. So this one is used for customizable slanting zones, and also this one will help you to identify patterns in the markets. So an example is when you draw, you do have an opposite line that you can move to anywhere at all to help you track a pattern in the market. Now the next tool is the Pitchforks. So under the Pitchforks, we have 4 different tools, different varieties. We have the Pitchfork, we have the Shift Pitchfork, we have the Modified Shift Pitchfork, and the Inside Pitchfork. So the standard Pitchfork is a trend-based drawing tool that helps you to visualize potential support, resistance, or equilibrium zones using a central median line and 2 parallel channel lines, which also tends to create a fork structure. As you can see on the screen, if I do draw a line from one end to the other, I have the option to extend the line all the way to a side. And this one will help you to identify support and resistance in the trending market. Now moving on to the other brothers of the Pitchfork is the Shift Pitchfork. So the Shift Pitchfork adjusts the center for alternative perspectives. It is a modified version of the standard Pitchfork, and it is designed to reduce the steepness that the standard Pitchfork offers. And as you can see in this example, if I do a click here to my desired location, you can see this time around it creates another line that helps you to control the steepness and also gives you a more wider range than the standard Pitchfork. And moving on to the next one, which is the Modified Shift Pitchfork. The Modified Shift Pitchfork, like the Shift version, is designed to correct the steepness of the standard Pitchfork, but it goes one step further by modifying both the time and price coordinates of the first points. So as you can see, if I do draw, this time around, instead of picking a line or creating a line on the outside, I create a line in between the already drawn trend, and then it allows me to create the 2 channels plus the median line. And the last one, which is the Inside Pitchfork, is a tighter version of the standard Pitchfork, often used for steeper corrections, and it's very as you can see on the screen, this is for very steep corrections in the market. Now the next tool is the Fibonacci tools, and under the Fibonacci tools there are many tools in there, but as you can see, one of them is my favorite, and that is the Fib retracement tool, because that tool is very powerful in the market. What it does is it allows you to identify pullback levels for a trend. You start on a swing high or low depending on whether it's an uptrend or a downtrend, and then you extend it all the way to the swing low. So for this instance, I started at the swing high and I have extended all the way to the swing low, and then I drag it across the screen so I can trade the pullback as it happens. And usually the key levels under the Fibonacci tool is the 0.618 and the 0.5. You can see the 0.54 because the candle is hiding it, but if I do bring it here, this is the 0.5. So these are the key levels usually used for potential pullback zones. And as you can see here in this scenario, when the price started here and came all the way down, when it pulled back into that zone, it got there and it continued from there. Now the next tool under the Fibonacci is the trend-based Fib extension. So the trend-based Fib extension tool is used to project future price targets beyond the completed price move based on the Fibonacci ratios. And this is how you actually do draw the trend-based Fib extension. So you start from your swing low or swing high depending on the trend, and you move all the way to your swing high or low depending on the trend. So in this case, this is my swing low. I started from my swing high, and then you head to the pullback and you extend it all the way so that you can have the market activity or the candles across the Fibonacci tool. And this one will help you to identify potential move targets in the future. The fib channel is a parallel channel with the Fibonacci levels inside, which helps with dynamic support and resistance. So what you can do is you just create your trend, and as you can see, you can create a channel with fib levels in between them. That will help you to get dynamic support and resistance. Moving on to the next one, we have the fib time zone. Okay, so the fib time zone draws vertical lines based on Fibonacci sequence to forecast timing of future events, and traders usually use this as a way of opening or closing trades within a time period. As you can see, if I draw here, I can extend it all the way, and it will draw vertical lines based on Fibonacci sequence to forecast the timing of future events. Moving on to the next one, we have the fib speed resistance fan. The fib speed resistance fan draws diagonal lines from a trend point using Fibonacci ratios to find support and resistance. As you can see here, these are the diagonal lines, and they are used to find support and resistance levels across the chart. Moving on to the next tool, we have the fib circles. The fib circles create a series of expanding circles using Fibonacci ratios, which is good for visual time and price symmetry. As you can see, if I do draw from one point to the other, I do have circles drawn that use the Fibonacci ratios. Moving on to the next one, which is the fib spiral. The fib spiral is a curved spiral projection tool based on the golden ratio 0.618. It follows the shape of the logarithmic spiral found in nature, like the seashores, the galaxies, and the hurricanes, and maps that same growth pattern onto the price charts. And with an example for the fib spiral, you will just have to identify a swing high and connect it to your swing low, and then head into the future to see what price will do when it gets to the other line. Moving on to the next one, we have the fib speed resistance axis. And the fib speed resistance axis draw axis based on Fibonacci ratios to identify potential areas of support and resistance as price moves over time. So this is how it is, and as you can see, their curved axes are based on Fibonacci ratios. And the next one is the fib wedge tool. The fib wedge tool draws a series of diagonal lines like a fan that converge into wedge formation using Fibonacci ratios. It's designed to help you forecast price contraction, trend exhaustion, and potential breakdown areas as price narrows over time. And this is how the fib wedge actually works. And moving on to the last tool under the Fibonacci is the pitch fan tool. So the pitch fan combines a Pitchforks medium-based structure with Fibonacci angles, producing a series of diagonal lines or fans that help identify potential trend channels, momentum zones, or reversal points. And as you can see on the screen, this is how the pitch fan actually looks like. And that's all under the Fibonacci tools. Now we move to the Gann tools. So under the Gann tools, we have the Gann box, the Gann square fixed, the Gann square, and the Gann fan. Now the Gann theory combines time and price, and the Gann box, for instance, overlays a grid on your chart using a Gann theory, dividing price and time into equal parts. It's designed to forecast key reversal points, trend continuations, and natural market rhythms based on square relationship between price and time. I know this all may sound a bit confusing, and you definitely do not need to have that all in your mind. You just have to just study the one that you feel you want to use it for trading. Either way, if you'd want to use a tool and you don't understand, you can actually drop in the comment section and I'll be able to create a video about it, explaining the tool and how you can use it. As you can see, there's the Gann box, which is overlaying a grid, dividing the price and time into equal parts for potential key zones or reversal points in the market. Now the next tool is the Gann square fix. However, I would like to cover the Gann square before I move to the fix, because the fix is just a fixed version of the Gann square. So with the Gann square, a Gann square is a mathematical grid that helps traders to find key price levels, turning points, and momentum shifts by squaring price and time together. As you can see, this is how the Gann square actually looks like. And now we move on to the Gann square fixed. Okay, so the Gann square fixed is a log version of the Gann square for consistent use across multiple charts. So it's just a logged version of the Gann square. And the last tool under the Gann is the Gann fan. So the Gann fan is a tool that uses diagonal lines to show potential support and resistance levels. And this is the Gann fan across the charts, as you can see here. And now we move to the pattern section. So under the pattern section, we have the XABCD pattern, the cipher pattern, head and shoulders, ABCD pattern, triangle pattern, and a third rise pattern. So the XABCD pattern is a tool in trading we use to draw harmonic patterns, which are geometric price patterns based on Fibonacci numbers. These patterns, like the Gately, Bat, Butterfly, and Crab, help traders identify potential reversal zones. Quick notes: harmonic patterns work best in ranging or corrective markets, not trending ones. And I'm going to show you an example of how to use the XABCD pattern. So as you can see in this scenario, we have a range in markets and you just have to pick one point from one swing low to the other. So I'm going to pick my first swing low here and it will be labeled as X, and we move to our swing high, which is A. We head back to our pullback, which is B. Then we move on to our second reversal to the upwards, which is C. And then we locate our last pullback, okay, and that should be D. And one thing you should know is when you're placing the leg D, the ratio between the X and the D should be 0.886 or 88.6%. And in this, I'm going to try as much as possible to place it at a point where we have the 0.886. And there we have it. So what do you do next? So after this one, you have to wait for price to go wherever it wants to go, and then just be patient and wait for price to come back to D. And when price gets back to D, you would have to wait for a confirmation. In this example, we have an engulfing candle right here, as you can see. And then what you can do is you can just enter the trade, place your stop loss below D, and then your target profit could be C, A, or even above when you use a Fibonacci extension. So that's just the XABCD pattern. Now let's move to the next pattern. Now the next one is the cipher pattern. The cipher pattern is a 5-point harmonic pattern with unique Fibonacci rules and is known for giving sharp reversals at point D. The cipher pattern is a type of XABD pattern, but not all XABD patterns are ciphers. Take note. Think of XABD as the general structure and cipher as a specific version with very strict Fibonacci rules. And there's an example of using the cipher on the charts. I can identify my low here and then move to my next high, place my points, bring it back down again as a reversal to my B, head over to the next swing, which is point C, place it, and then with this one, when you're placing the point D, you should know that the ratio between the X and the D should be 0.786, which is 78.6%. So I'm gonna find a way to place this D at a point where it will give me the 0.786. And this will be our point for the D as it's presented to us with the 0.786 ratio between the X and the D. And that's for the cipher pattern. So the next pattern after the cipher is the head and shoulders pattern. So the head and shoulders pattern is a reversal pattern that signals a trend is likely to end and reverse. There are two types. We have the top, which appears at the end of an uptrend, and the bottom, which appears at the end of a downtrend. So in this scenario, we have an uptrend, and I'm going to show you how you could place the head and shoulders to at least give you a signal in the markets. So for example, we could pick a point from this side and I extend it to the high, bring it back after the pullback, extend it to the next high, bring it back again after the pullback, and extend it to the pullback, then bring it back onto that line. Now this is the head and shoulders pattern, and as you can see, we have the left shoulder and we have the right shoulder, then we have the head here, So this line, if price breaks this line, you should be looking to enter the market. In this scenario, a short position. And that of a downtrend will look like this, where you have the left shoulder, head, and the right shoulder as well. So that's over the head and shoulders pattern. So the next one after the heads and shoulders is the ABCD pattern. So the ABCD pattern is a 3-leg 4-point pattern used to identify potential price reversals. It's based entirely on Fibonacci symmetry. The length and timing of each leg mirror each other. It comes in two versions: the bullish ABCD, where you buy at point D, and the bearish ABCD, where you sell at point D. And I'm going to show you an example of using the ABCD pattern. So in the market, you choose your low and then plot your point B at a high, and then plot your point C after a pullback. Ratio between A and C should be 0.618 or 0.786, and I'm going to try and place that on the chart right now. And the D points should be placed at an area where the ratio between the B and the D is 1.272 or 1.618. As you can see, I haven't been able to place the exact ratios, so I would have to zoom in and then fix that right away. And now you have the exact ratios I was talking about, where you have the 0.786 between the A and the C, and then you have the 1.272 between the B and the D. And in this scenario, when you plot your D point, you would be making an entry here, which is a short position because this is for a sell scenario, and your stop loss will be just above D, and then your target profit could be C or A, or extended with the Fibonacci too. Now the next one after the ABCD pattern is the triangle pattern. The triangle pattern forms when price gets squeezed between convergent trend lines, creating a triangle shape on the chart. It shows indecision or consolidation between a breakout in either direction. There are three main types of the triangle patterns. You have the ascending, the descending, and the symmetrical. Like I said, I won't be going into too much details with these tools because that will make the video very much longer. However, if you would want a detailed explanation of a particular tool, just drop it in the comment section and I'll be happy to create a video for you. So there's an example of using the triangle pattern. So we pick a low, we head over to the high, bring it to a pullback, and as you can see, the market is already drawing a triangle. And in this case, you would wait for a breakout and a confirmation before you enter the market. Now the example in this scenario is the descending triangle. As you can see, we have close to a flat bottom here, and then we have a line all the way from the top heading to the bottom at the right side. And the last tool under the pattern section is the 3 drives pattern. 3 drive pattern is a 5-point reversal pattern made of 3 consecutive impulse waves followed by 2 corrective pullbacks. These help you quickly visualize potential market moves, and this is how the 3 drives pattern is drawn with a 3 drives pattern too. So you can just pick your low or high depending on the markets, and then you extend it to the next point, which is the high in my scenario, and then you bring it all the way to the pullback. And this is one of the first corrective pullbacks, and I move it to the next high. One thing you should note though is the ratio between the points should be 1.272. So I'm supposed to place it in a way that gives me that 1.272 right now. So we can have a 1.27, right? And then we move to the second pullback. This is the second corrective pullback. And then we also make sure that the next high also is 1.27. And in this case, what you would do is you would be in a short position at this exact moment at where we ended the previous point. And the same goes for a downtrend scenario where you have from the high, you mark your low, a corrective pullback. You make sure that the next low has a ratio of 1.27, and then with the next corrective pullback, you mark your point and then make sure that the next low also has a ratio of 1.27. And then at this moment you would be entering a long position, or you would be buying in this scenario. And that's all for a trade rise pattern, and that's all for the tools under the pattern section in TradingView. So the next tool category is the Elliot Wave tools. So under the Elliot Wave, we have the first one, which is the Elliot Impulse Wave. The Elliot Impulse Wave is a 5-wave pattern that moves in the direction of the main trend. It's a basic building block of market moves in Elliot Wave theory. The full Elliot structure has the impulse phase, which is 5 waves, and a corrective phase, which has 3 waves, but we'll talk about that after the impulse wave. So we're using the impulse wave. An example is one showing you right now. This is where the market started to trend upwards. So we mark your first point or your first swing low, you move it to the next swing high, and then this will be the first correction, and this will mark as our point 2, and then we extend it all the way, creating our point 3. So usually the Elliot Wave theory, the wave 3 is usually the longest among all of them. At first it was 5, but over the years with more redefinitions, the 3 is presumed to be the one with the longest wave among all the other waves. So after the 3 we have another correction, which will mark our 4th wave, and then finally we have our 5th wave. And that just marks the Elliot Impulse Wave. Now after this is where Elliot Correction Wave comes in. So the Elliot Correction Wave is a 3-wave counter trend move that comes after a 5-wave impulse. It's labeled ABC, and in this example, as you can see with the tools, you have the Elliot Correction Wave here labeled into brackets ABC. So as you can see here, this was a correction before the market continued again. So from our point 5 or wave 5, this will be our A at the low, this will be our B, and then this will be our C. So right after here, the market continued the trend again. So this is what is meant by the Elliot Correction Wave. So this is the impulse and this is the correction wave. The impulse has 5 waves, the correction has only 3, labeled as ABC. The next one is the Elliot Triangle Wave. So the Elliot Triangle Wave is a corrective pattern made up of 5 overlapping waves. There are 3 types of Elliot triangles. We have the contracting triangle, the expanding triangle, and the running triangle. But at the moment, I'm just going to show you an example of how the Elliot triangle would be like. So first of all, let's try and create a scenario using the trend lines. So assuming we have a triangle forming from one end to the other. In this case, we can plot our Elliot Triangle Wave, and this is a 5-wave pattern. So as you can see, we have the A here, and then we have the B, then we have the C, we have the D, and then we have the E. So after plotting the points, the only one to focus on right now will be the E, and then with the E, you will only enter the market if price breaks outside the triangle. Now moving on to a more complex Elliot Wave tool is the Elliot Double Combo Wave. As you can see, it's labeled as W, X, and Y. So the Elliot Double Combo Wave is a complex corrective structure that has the W, the X, and the Y. So think of it like this. The market tried to correct it to one pattern, which is our W, but it wasn't enough, and it formed the connector, which would be our X, and threw in another corrective pattern, which would be our Y. Basically, this is what I'm trying to say. So we're using the Elliot Correction Wave. We assume that we have our first wave here, which has ended. Okay, now in this case, this will be our W, and then the market says it's not done yet. It's also trying to correct itself again, and then we have another wave forming in here, ABC. Now we have 2 waves. This will be our X, so we have our W, and the second wave would be our X, and the next wave could even be an Elliot Triangle Wave, and that would also start from here and then create this scenario where after E you would have to enter all the way to continue the trend. So in this example, this creates our Elliot's double combo wave, where we have W, we have our X here, and then we have our Y. Okay, so each of these correction waves is dedicated to one letter in this example. So this will be our first correction marking our W, our second correction marking our X, and then our last correction, which in this case was a triangle, marking our Y. Now I know all this may sound a bit confusing, but I'll be creating a video specifically focusing on Elliot Wave. So if you don't understand this part, you shouldn't be too bothered. I'll be creating a new video for you to understand and know how to integrate that into your trading. Now a more complex scenario is a scenario where you would have to use the Elliot triple combo. So in this case, instead of the double combo, there's a triple combo. So you have 5 letters instead of the 3, and this is an example. So using the correction wave, we have our first wave here. Now this is our W, that's the starting point, and then move to our next wave. That would mark our X, okay? And then now we have another wave. That would mark our Y, okay, just like the first one, but this time we have another wave attached to it that will mark our second X in this scenario. And then we have the last wave that will mark our Z, and that could be an Elliot triangle wave, and a triangle could converge at a particular point to go and continue the trend to the upside. So in this case, we're using the Elliot triple combo. We just place your W, which is the first correction wave, and then your X, which is the second correction wave, and then your Y, which is the third one, and then your second X, which is the fourth wave, and finally the Z, which is your final wave or your fifth wave. Once again, if you're a bit confused, don't worry at all, because I'll be creating a video specifically on Elliot waves. Now let's move to the next tool. Now we move to a very simple tool, less confusing, which is the cyclic lines. The cyclic lines are vertical lines placed at regular time intervals to help visualize market cycles, which are just areas where price may react based on recurring time patterns. You use them to anticipate turning points based on time, not on price. So in this scenario, if you notice that the market has a repetitive pattern at a certain time, you could just choose a range, maybe 12 hours or 24 hours in between, any time at all, and then the tool will choose the same time range and extend that same time range to the right side. And as you can see, it creates recurring vertical lines throughout the charts. If you would want to trade only within particular ranges, you can use this tool to help you, so you can enter and exit the market only within specific time ranges. And the next tool after the cyclic lines is the time cycles. So the time cycles analyze when price changes might occur, not how much. They help predict potential turning points in the market based on repeating time intervals. So a little bit close to the cyclic lines. However, you would have your demarcations in arcs as drawn on the screen. So you choose a range and it also marks the same range across both sides of the chart. So if they are repeating time intervals, you can have potential turning points. And then the last one after the time cycles is the sine lines. The sine lines are wave-like curves based on the sine function used to visualize market rhythm or cycles. They help traders to anticipate potential tops and bottoms based on time-based wave patterns. And there's an example of using the sine line. So you pick one point to the other, and this will help you to anticipate potential tops or bottoms on time-based wave patterns. So it extends both to the left side and to the right side as well. So now we move to the forecasting and measurement tools. So under the forecasting and measurement tools, under the projection section, you have the long position, the short, the forecast, bars pattern, ghost feed, and the projection. So the long position is a tool used to visualize entry, stop loss, and target profit for a bullish scenario. So in this case, I might want to enter at this candle close, and then as you can see, I have a visualization of my stop loss and my target profits as indicated over here. And same goes for the short position this time around for a bearish scenario. So if my entry is supposed to be here, as you can see, I have my stop loss and my target profits indicated. Now moving on to the forecast tool. The forecast tool is used to draw a potential price move path. So assuming I feel that the price will continue upwards in this direction, all I will have to do is just click one point and then move to my preferred location, then click and release again, and then to draw this sort of angle to just visualize the potential price movement to the future. Now the next tool under the forecast tool is the bars pattern. So the bars pattern is basically used to copy and paste bar sequences. It is great for learning structure and flow, and also helps to see if a similar price movement might repeat in the future. So for example, I can decide to copy the bar sequences from one range to the other. And as you can see, I have a replica of what happened, and I can just paste it at anywhere and then try to understand the structure or try and see if price will repeat that similar movement in the future. Now the next tool is the ghost feed. So the ghost feed is used to visualize a price projection into the future by creating faint shadow candles. So if you want to project the price may move in a certain way in the future, you can use the ghost feed and just click at different points to simulate the candle movement, and you can double click at the end for it to be released. Anyway, with the ghost feed, it doesn't really give you the usual candlesticks that you see. It's just used for projection. And moving on to the last tool under the projection is the projection. So the projection is basically used to visually outline future price path, not measured, just a visual guide. So as you can see, I can just create an angle here, so from one point to the other, and then you do create the angle to visualize potential price movements. And now we head to the volume based tools, and under that we have the anchored VWAP. So the anchored VWAP is used to show the average price weighted by volume starting from a specific point that you choose. So example, I can just click on this particular area and you see that there is a drawing indicating the average price weighted by volume. It's perfect for analyzing institutional footprints and also acts like a dynamic support or resistance. On the next tool under the volume base is the fixed range volume profile. So the fixed range volume profile is used to show where the most trading volume happen within a specific price range and time range you select. So for example, if you select the range from one point to the other, as you can see, it shows me where the most trading volume happened within that specific time frame that I have indicated. And the last tool under the volume based is the anchored volume profile. So the anchored volume profile is used to show volume distribution starting from a specific candle or event you choose, like a breakout, swing, high or low, or news release. So for example, you can just start from here, and all other candles that follow, it will just give you the volume distribution as shown on the right side of the screen. This is basically where trading happens most within the selected range. Now the next one is the measurer. So under the measurer, we have the price range, the date range, the date and price range. So the price range is a tool in TradingView used to measure the difference between two price levels. So assuming I want to measure the price between this selected price level to this price, as you can see, it gives me that the difference is 68. And the next one under the measurer is the date range. So the date range shows the time duration between 2 points, and it measures how long price stayed in a range and also indicates the bars within your selected range. So for example, as you can see here, I have 51 bars, 4 days, 3 hours. That is how long price stayed within that range, and this is the volume as well. And the last one is the combination of the two. So this one measures both price and time. Right here we do have the amount of bars, how long price stayed within that range, and the price difference as well. Now we move on to the geometric shapes, and under the geometric shapes we have the brush, the highlighter, and several arrows and shapes as well. So starting with the brush allows you to draw freehand. And as you can see, you can just click and drag anywhere at all, and then the drawing will be made. I didn't have my toolbar while I was recording. I placed it on top, so if you're wondering where my toolbar is, this is where my toolbar is. So with this we can change the size of the brush, and we can also change the color to any color at all. And that is just the brush. And moving on, we have the highlighter. So the highlighter is a drawing tool that lets you mark areas on your charts with a translucent or colored overlay, like using a rubber highlighter pen. Now we move to the arrows. So the arrows, we have the arrow marker. The arrow marker draws a small arrow icon for a clean directional signal. So you click on one point, you extend it to the other, and then there you have your arrow drawn. You can also change the color as well using that toolbar. And the next one on the arrow marker is the arrow. So the arrow is used to point specific movements or signals by drawing the arrow symbol, as you can see on the screen. And you can also change the size and the color as well. And you can also add some text in there. As you can see, if I hover over the arrow, there's an add text here. You can just click and you can add any text at all. And the next one is the arrow markup or the arrow markdown. So the arrow markup or markdown are specialized upward or downward arrows for making bullish or bearish points. There's the markup, and this is also the markdown. So you can place it anywhere at all to just mark bullish or bearish points. Next up we have the shapes, and onto the shapes, this is the rectangle. Obviously it's used to draw rectangles to mark key zones or areas of interest. And also you can change the outline and the fill color using the toolbar. As you can see, I'm doing that. And the opacity can also be changed using the toolbar. Now the next one is the rotated rectangle. So the rotated rectangle allows you to draw a rectangle that is rotated. You click at one point and then you move to the angle that you prefer to get your rotated rectangle from. You click and then you drag it to either side, and then you have your rotated rectangle. And you just click and you release, and then there it will be drawn. And now we move to one of my favorite tools in trading, which is the path tool. So the path tool is used to trace specific price movements, and usually when you start learning about trading, you will know that the first thing that they'll be teaching you is lines to show you higher highs, higher lows, lower highs. Okay, and path tool helps you to visually create those lines if you find the market confusing. So for example, you can use the path tool to create a visual guide as to how the market is moving right now. So you can just click at our previous low and then extend it to our high. There's a pullback, there's a next high, there's another pullback, there's another high, another low, another high. As you can see, market failed to break this previous low, and after this double bottom, market skyrocketed. You can double click when you're done using this tool and it will release. Okay, so as you can see, the path tool will help you to understand the markets that you may find it confusing because the candlesticks can sometimes be tricky, and the path tool will just help you to identify the trend of the markets and any market structure that you may find confusing. And the next one under the path tool is the circle tool. So this is basically just used to draw a circle. It could be used to indicate a key area on the chart as well. So you just click on one point and extend, and as you can see, the circle is drawing. And after you find your desired size, you just click and release, and then the circle is drawn. And the next tool on the circle is the ellipse tool. And the ellipse tool, unlike the circle tool, creates a stretched oval shape. And how you create that is click on that point and then move to another desired location. Click, hold, and drag it to your desired location to just make that ellipse shape. And after you find your spot, you just click again and release, and your ellipse will be created. And the next tool under the ellipse tool is the polyline. So the polyline connects multiple points using straight lines. So for example, you can just create these points and then connect at the end, and you see you have your shape drawn by connecting all the points that you created. Now the next tool is the triangle. So the triangle is basically used to draw a triangle, and how you draw that is you first select your main point and starting point, move to your next point and click again, and then move to your desired location to draw the triangle. So moving on to the arc tool. The arc tool just lets you draw an arc on the charts by clicking on one point, moving to your desired location, and then just dragging it either upwards or downwards, and that will create your arc for you. You can also create the arc by placing your line horizontally, and that will give you the arc to the right or to the left. And the next one after the arc tool is the curve tool. Now this one will also help you to create a curve by clicking on one point and then moving to your desired location and clicking on the other to create your curve. And the last one is the double curve. Now this one gives you a curve in an S format. So as you can see, you click, and then when you expand, you see it drawing this sort of S shape. And then when you're done, you can just click, and then the curve should be formed. Next up, we have the annotation tools. So the annotation tools basically allows you to add text and notes directly onto your chart. So the first one is the text tool, and the text tool allows you to add text to your chart. So you can click on any desired location, and then you can type in text that you want to add, and there, that's it. And also you can change the color of the text as well, and also you can also increase the size of the text. When you head into the settings, you can change from italic to bold, and all of that is will apply to the text. And next one after the text is the anchor text. So the anchor text, one thing I forgot to mention, TradingView is removing the anchor text, but it's not actually being let go. You have that option in the main text. And before we head to the anchor text, let me just show you. So with the text that we inserted right now, when you click on it, you can see there's the anchor drawing here. So you can just click to activate the anchor, and what the anchor does is the anchor will let the text stay where it is on the screen, regardless of whether you zoom in or you move anywhere at all. So as you can see, this is what I mean by the anchor text. Okay, so TradingView is basically moving that to the text, and so if you don't find it by the time you're watching this, this is where you can find the anchor text. And right now I remove it, as you can see, it doesn't follow me anywhere I go. So with that said, I think the anchor text is actually explained. It will be the same function as switching the option of the anchor on the main text. And moving on to the next one is the note. So the note basically just gives you a tag style note, and then you can just insert any text at all in there. It's basically good for quick reminders like breakout zone or stop loss here. So for example, you can just click one point and extend, and as you can see, there's an add text below. So when I click and release, I can add my text, and then that's it. This is the notes. So moving on, we have the price notes, and this time around, instead of giving you the ability to add text, this only just indicates to you the price, but in a note format. So you can click here and then move it to anywhere, and then as you can see, the point at which you clicked has its price in the blue box, as you can see, and that also gives it that tag style. And moving on from the price notes, we have the pin, and the pin is a small pin icon that attaches to any point. Think of it like dropping a push pin on the chart, so you can just place it here and then you can indicate yourself information about that particular area. So when you hover over the pin, you can see that there's a double top with the text that I wrote. On the next one after the pin is the table. The table allows you to insert a table directly on your chart with rows and columns of data, usually used for journaling trades or showing setups or listing confluences. What you have to do is just click one point and then the table will be released. As you can see, you can just drag and extend the sizes of the cells inside, and then you can just click any of the boxes and then just type anything at all, and that will be saved in each box. So now we move to the callout tool. So the callout tool is used to attach a text label with a pointer to a specific price or candle. It is usually used to highlight and explain a key point clearly on a chart. So after selecting the tool, if I click anywhere on the screen, as you can see, I have this like a call out, and then I'll have to click and release again, and I can type in any text at all, and then that will be it. Now the next one after the call out is the price label. So the price label in TradingView is used to mark a specific price level clearly on a chart. It is used to highlight important prices like entries, targets, stops, or key supports or resistance. So for example, if I want to mark this area, I'll just have to click on the screen, and then I have my price attached to my label. The next one after the price label is the comment. So the comment is a tool used to add a simple text box anywhere on the chart without a pointer. And that's the comment. And the next one is the signpost. So the signpost is a text box with a flag style tail pointing to a candle or a zone. So you can just point here, and right after clicking you'll see that there's a tail that is pointing directly to the candle at that point, and it tells me to add text, so you can add any text at all. And that's a signpost. So the next one after the signpost is the flag mark. So the flag mark just basically gives you that flag icon. So if I click anywhere here, I have the flag icon here, and you can just change the color of the flag by just clicking on that bucket paint and then choosing any color at all to change the color of the flag. Now the next one after the flag is the image. So the image basically allows you to insert an image. So all you have to do is to just click on choose image, and then you can choose any image from your desktop, and that will be inserted into the TradingView. And the next one after the image is the tweet. So this one allows you to insert a link of a tweet, and that will embed the tweet onto the chart. And the next one after the tweet is the idea. So the idea allows you to insert an idea that you've created or published through TradingView. So for example, when you hit publish right now, you can click on publish an idea. You will just have to insert your title and also provide a context for the idea you're publishing, and then after that you can click on continue, and then you'll be given a link where you can share, or you can just copy that link. So when you copy that link, anyone on TradingView can go to the annotations, and under the annotations click on idea and insert your link, and that will paste the idea as a snapshot onto the screen. Now moving on, we have the icons. So under the icons, there are many flags, stars, arrows, and even emojis inside, and it's great for keeping visual cues. So you can just select any icon at all and click, it just appears on the chart. You can resize it anyhow you want it, and that's just with the icons. And moving on, we have the measure. So the measure tool is used to measure price and time between 2 points. So you can just click on one point and head over to the other, and as you can see, I have my bars, I have the price change, and I also have the time duration between my selected range, and also the volume, and it disappears by clicking on anywhere on your chart. And moving on to the next tool, we have the zoom in tool. So this one allows you to obviously focus on a section of the chart. So I zoom in, I want to focus on only this section right here. Once I highlight my area, you'll see that the chart will zoom in to only that selected area. This is very useful in case you just want to focus on a section and do it so quickly rather than having to, manually adjust these parameters. Over here, you can just use the zoom tool and then that will just zoom in. And aside that, we do have the zoom out, and this will just zoom you out of your charts. Just know that the zoom out option only becomes available after you zoomed in using the zoom in tool. So only comes available after you use the zoom in tool. Now the next one is the magnet mode. So the magnet mode snaps your drawing point to candles. So since the magnet tool is on, if I'm about to draw anything at all, as you can see, as I move, it just straight up attaches itself to the open or the close of a candle. So if I move up, as you can see, it's just attaching to the close and open of candles. And then even when extending, it also attaches to the open or close of a candle. So that is just a magnet tool, and you can turn it off by clicking on it again. And the next one is the keep drawing. So the keep drawing will let you stay in drawing mode and keep the selected tool active. So for example, if I click on the keep drawing and I have this, as you can see, I can draw multiple trend lines without having to click the tool again. So this one will allow you to keep drawing on your screen until you feel like you don't want to draw anymore, and then you can just turn it off, and then right now you can just move on your chart. And the next one is the lock all drawings. So this will lock all your drawings, and this one helps you to prevent accidental edits. So when I click on the lock all drawings, I cannot select any of my drawings and move them anywhere at all that I would like. I can only select them to make those transform controls come, but I can't move them anywhere at all. And you can just click back on the icon, and then your drawings can now be moved to anywhere that you desire. And the next one is the hide drawings. So under the hide drawings, we have the hide drawings, hide indicators, hide position orders, hide all. So you can hide all drawings, and then as you can see, all drawings will disappear, or you can just hide just the drawings, and if you have anything as indicators or position and orders, that will stay, and then the drawings will disappear. And moving on to the last tool is the delete drawings tool. So under delete drawings, we have options to remove all the drawings. You have options to remove an indicator that we have, and we have an option to remove the drawings and the indicator, meaning remove everything at all, meaning to remove any drawing or diagram that we've added. And then when I click on remove 28 drawings, as you can see, the drawings are all gone. I can hit Ctrl+Z, and then the drawings will come back. And there you go, every charting tool inside TradingView explained. If this helped you, smash the like button, hit the subscribe, and drop a comment with your favorite tool. Also, if you want tips and tricks about using TradingView and making your TradingView experience much better, you can also drop that in the comment section, and I'll be happy to create a video for that. Thanks for watching, happy charting, and I'll see you in the next one.